Crypto market right now is trading at $1.18 trillion and it's a little bit of green today. But if we look at the macro perspective of what and how things are evolving, it may not actually give all of us positive vibes for sure. Because the way we observe the macro and how big investors are getting positioned, there are some changes, right? And if we actually look at that, yeah, this can just be a thought process, but that still is one in the market. After which, while you look at how the rates are going this high, when you actually have sky high level of debt, and this is not the government debt I'm talking about. This is the household debt. They cannot print dollars to pay off their debt, right? And why is that really important? Because if you actually focus on how things are evolving and the breakdown here, it doesn't look really good, especially say mortgage. Your value of the house is dropping right now as the rates are high. Same applies for the auto loans. And with all of these scenarios in front of us, how do we really think this is going to impact the cryptocurrency market? Because yes, we have strong fundamentals, region to region, the adoption of crypto, the regulatory frameworks, everything is changing. So the amount of new investors jumping into this asset class is going to be higher. Right now, we actually have G7 finance ministers who are about to discuss crypto regulations. Great. Now we are already watching regulatory effects on the G20. Right now, we are getting the understanding of how things are evolving, and it actually takes you down through that hole where we identify like, okay, they're actually talking about this, right? We look forward to the FSB finalization of its high-level recommendations by July 2023. So it's like a couple of months from here, we are going to get more details on what they are actually doing. Now, in between that, right now, while we look at the market, we don't have much of a volume, do we? This is the range when the market was about to go higher. People were getting that vibe, we're going high, and everything was positive. But right now, we don't have the volume here. What does that really mean for Bitcoin? What does that exactly mean for XRP? Because the level of volume in XRP right now is different from that of Bitcoin. So we're going to actually break these down in a way that all of us get to understand what exactly we are looking forward. What are we anticipating? Because this goes in Bitcoin, this goes in the altcoins, and everywhere this is having a higher odds. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Right now, the market is showing you that it is slow, it is boring. But we understand the fact that when the market is boring, that's when you get positioned. That's when you learn more to understand what exactly is the market showing you. Here, on the XRP chart, the daily actually shows you like, okay, the RSI is actually dropping and it is forming a falling wedge pattern. We are close to a breakout, but we have not yet managed to break higher. So yes, we are at a resistance, but we would like to see that breaking higher. Great. So you actually zoom in to see, okay, on the short-term horizon, what the price action shows us. So it is at a short-term resistance as well as the medium-term resistance, agreed. So we do have overhead resistance to break through, but if we actually manage to break that, now you have room to the upside. So while you follow XRP, there is still a possibility, which I would say like, okay, don't neglect this possibility of another leg coming back down to retest these lows or even go to a new low close to 0.4, 0.39 range to create that level of panic before it actually goes up. Now, one of the primary reasons for that is the altcoin market as a whole is not looking that positive entirely right now. Yes, while you look at Ether, you can see like, okay, there was a base here, we wicked through that, we are doing all sort of things. And if you actually plot a trend line, this is how it actually looks like, right? We are actually dropping and it's not positive, because the way we look at the market right now is like, okay, short term, we're going to observe another 10% drop. But then if we actually zoom out, now you see like, okay, that's a short-term move, and that would be something similar to what we have observed here. And that really was a buying opportunity, 1,400 towards 2,100. It actually rallied that high. Now, that was just the third wave of that total market cycle move, right? It started like $1,000, it went up to like 2,100. Now, this drop is going to create opportunity zones, and that's why we are actually focusing on a lot of these different assets to understand where exactly their bottom is, because some of them are literally dropping and their supports are being broken and it doesn't really look good. Whereas on the other side, it actually shows you this is the buy zone and it's getting close to that. You are literally observing all these different assets. Now, it can be in the top hundreds, it can be in the next one, depending on the level of risk you're taking, right? Now, we come back here, we want to really break it down. We actually go on to a hourly chart for XRP. One of the reasons why we usually avoid the short-term fluctuations is like, okay, this is crypto market. The level of manipulation which you actually get here is super high. So to get less noise and more precision to your thought process, it's better to be on the long-term horizon, right? So now we are actually zooming in just to get an idea of what the high-frequency trading bots are doing right now. So you do see the possibility that, yeah, we are actually coming down, and we are making this pattern. So normally we would imagine, okay, this is going to be the next move. This is what we would like to see. Great. But we also understand the fact that we've been moving down from some time, right? We've actually put in different legs in the market like this. So if that is true, then we're not actually looking a long way to the downside, at least on the short-term horizon. It suggests like we may do a retest, but then we would most likely bounce back higher. That is a huge possibility. Now, you actually zoom out to get a bit more clarity, and that now becomes like, okay, this happens to be a long-term support. We are at that level. It's all looking positive, right? If your horizon is different. Now, one of the other thing on the 4-hour chart to note, which is, important, is that you observe the fact that the price is trending lower and the price is actually making lower highs each time it is moving to the downside, lower lows, right? And it actually gives you the idea, okay, it's forming a lower low, but at the same time, RSI is actually making a double bottom. It is not going below that level. So it kind of gives me a positive vibe there. And then I want to actually zoom in to see like, okay, what exactly is happening right now. And that gives me the thought process here. The price has actually made a clear bottom, somewhere close to this range. You wicked there, you came back, retested. But on the RSI side of things, it shows me there is a divergence. So now I'm looking at this. Okay, the first one is like, okay, from April 21st all the way down towards 9th May, we're getting a divergence. And after that, within last 1 week, we are already observing the fact that, okay, we're actually watching another divergence panning out. So all of this is short-term thought process. Great. Now we actually have to go into the macro to see, okay, if that short term suggests me there can be a bounce, what does that really mean, right? Is it actually going to hit a wall? And in this case, yes, I would look for this level to act as a resistance for sure. That's going to be somewhere close to 0.45 towards 0.46. Great. But on a weekly chart, this gives you even better perspective. Just 2 weeks or 2 candles push the price from 0.36 all the way up to 0.585. Now from there, or since then, it actually took 1, 2, 3, 4, 5, 6. And there's the 7th candle. And we haven't yet reached the bottom. The difference here is you just got one hell of a candle which erased most of the fluctuation here. So the bullish level was kind of removed entirely from the market. Great. So right now, if you actually plot the thought process here, On the macro, we would actually like to see, yeah, things are evolving, but it also should be noted with the fact that we already have completed the ABC pattern here. While you actually look at the corrective leg, you actually get to see like, okay, you do this pattern, you actually come make a bottom, and that's it. That's where the bottom is. Great. Then you actually start another wave structure, move back up. So it does show like, okay, we are somewhere near the bottom. Now, the different thought process which you can put here is, as I always say, like, you just put at the all-time highs and the lows and see where the price is right now. If you're close to the bottom, you buy low, you sell high. That's what you do as an investor. But again, it depends on your time horizon. If you look at the market and say, for me, it's next 3 weeks, next 3 months, it is going to be hard, right? That was really a bullish move. But right now, this is a weekly chart, and this 7 candles is weekly candles. So that shows you the level of pain and disbelief existing in the market right now while we come back to retest that range. So we did manage to break higher from this level, which is actually really bullish to my thought process. And the retest is still pending. We haven't yet reached that range. So on the weekly, the RSI still is here. We did not break to the downside. We did not bounce to the upside. So we are still waiting to see confirmation there. And then you actually go back on the daily to actually see what the trend line shows you, connecting all these bottoms. You're still at the bottom level. You're still at the support. So you can still anticipate the fact that the price can still come back down a little bit, which would be fine to test 0.4 or just below that. Now, take the same ideology, which we understand from the Bitcoin market. Say we shared a thought process while we were here saying, okay, we are about to drop, great. And right now, the short-term legs actually shows you like, okay, I'm done. But that corrective movement happens to be the corrective movements for this run up. That's done. Great. Now we do have one more pending, and that's where the panic lies. That's where the market actually shows you narrative, which can be scary, right? And if you actually put that perspective, yeah, here you manage to come back just below the wave 2 bottom, or the top, just above the top of wave 1. Now, if we put that perspective, we are observing that the range we are talking about lies somewhere here. And we are right now $27,000. Talking about $20,000, $22,000 can be painful. It would be like, okay, you're bringing more FUD into the market, but that is the reality which we are observing in the market. Either we get a divergence suggesting the fact that, okay, price is building momentum, we are going back up. That would be better. Because if you actually observe this, we got a divergence to the other side, which is corrective direction, and we started correcting lower. And right now the RSI does suggest that we are still following the same trend. We are still doing the same pattern. So what we should be eyeing from here is this resistance. If the RSI come back up here, you get rejected to the downside, it is definitely going to be painful. Now, if you are the guy who anticipated this thought process of market coming back as low as $20,000, $22,000, $23,000, and you're prepared mentally and you have the dry powder ready to buy a lot of these altcoins, now you do have opportunity. Now there is a lot of different coins in the market. It's not one or two. There is a lot of different assets in the market, which when you actually take a look at, you'll see like, okay, things are evolving. Now, yes, you do have concerns there, but you understand that this market is about technology. This market is about adoption, and the world is now looking for an alternate asset. One of the reasons for that is like, okay, people are having hardships looking at the reality. So when they recognize the fact that this space is now in trouble and almost quarter of these are about to renew their contract, the debt contract with the banks. And right now the banks are not in a shape to do that, right? The rates are sky high and they are most likely taking like 2 to 3 years or 5-year max. They're not actually talking about 30-year mortgage for commercial real estate. Most likely The case is the small banks are already facing a ton of trouble and commercial real estate can end up pushing them off the edge. Can this go the other way? It's going to be hard to anticipate that we are going to go down. That's going to be the max pain range 1. Now ask about the same situation. If you believe that a lot of people think like we are going down to this range, maybe 0.2, maybe 0.3, then will the price actually do as the majority think, or it goes the other way around? So that's what we have to wait and see. So if you did receive value for your time, please do hit that like and subscribe button if you haven't done that already. I'll meet you guys on the next video. Bye for now.